Hi everyone, hope you're doing well. Today I'm going to talk about my largest UK holding because on Monday they reported a trading update, a full year trading update, and today we're going to take a look at those numbers, and also there's a lot of other things I'm going to talk about in today's video as well. So I hope you enjoyed the video. Let's get started. Now just a quick shout out, a lot of you guys have been using the link in the description to join Trading212. That's personally for me the investing platform that I use, and if you do want to join through the link in the description and get a free share worth up to £100. I've seen a lot of you guys signing up for that. Now, really quickly, I was actually going to make a follow-on from this video yesterday, but I actually wanted to do a proper video, so maybe I'll do that one tomorrow, because I could see a lot of you were agreeing me and seeing some of the grifts that some of these guys were doing, but at the same time, there was some people that are just having the wool totally pulled over their eyes. I saw people actually sticking up for some of these guys, and I was like, wow, you guys are very easy to persuade. But I saw this comment, and I wanted to just address this comment, because obviously I started the video off by saying about Trading212. I want to say that anything that I do mention through a affiliate link is actually a program that I use. I don't promote something just because they're paying me a lot of money. So for example, Trading212, even though I promoted them at the start of the video, it is the best investing platform that I personally use myself. And as well as that, ever so often I'll promote Stockopedia and Simple Wall Street. Those are two platforms that I personally use as well. That's why I recommend them. And I have done even before I had affiliate links with them. But sometimes you just get some stupid comments from people called Mark Owen, and I want to clarify that once again, even though I've done it before. Just want to make some clarity on that one. Anyway, getting on to some proper YouTube stock market content. Hollywood Bowl is my largest UK holding, and they did report earnings the other day. It has been my largest holding in the UK side of it for a 2 years-ish, I think now. The first ever largest holding I had in the UK portfolio was actually Greg's, and this stock did really well for me. Obviously I still own some shares right now, which I'm up over 100% on. I did sell out a good chunk of my position though, and cashed a lot of it in, but it was a really good performer. In between we did have the Boohoo, which did okay for us, and then it absolutely sunk off a cliff, so it didn't work out so well. And then obviously we had S4 Capital. We won't talk about that one. That didn't do so well for us. I always say that was still, you know, you can pick as many winners as you want, but you'll still have S4 Capital throw in the comment section. I mean, to be fair, it was an absolute stinker of a stock, and hey, you never know, it still might work out. I mean, I'm being a little bit optimistic there. It still might work out, but it's not performed that well. But what I've got to say about S4 Capital is that I do always see it thrown in the comment section, but I remember when I did start buying S4 Capital, and the stock actually was up like 50-60% during this time frame. And people are actually saying, oh, what a stock pick, it's absolutely amazing. And I guess it was actually a successful stock pick if you sold it out at the right time. Just if you held it like me, like an absolute idiot, it didn't look as good of a stock pick. But that's what I always think some people forget about that one, is that even though it didn't work out, it was actually a stock that did perform quite well after I bought it. It's just that I held the stock way too long. But you know what I should do? Is I should do what all these other big stock market YouTubers do and delete it and hope no one ever mentions it again and pretend I never owned it. But since then, my next largest holding position is Hollywood Bowl. It has been for the last 2 years, and they did report earnings, which we'll look at in a second. I am actually thinking of changing my top 3 holdings in the UK portfolio, and potentially I have a new largest position. I am liking the look of Money Supermarket right now. 14 times earnings, 6% dividend yield. With the interest rates getting cut, potentially big boom in like mortgage rates, personal loans, and then if the energy market comes back, it should fly massively next year when that does come back in Easter. Maybe it's worth a video on actually these 3 stocks that I'm about to mention, but I just don't know how much of a big boom that energy market's going to give the company. That's what's making me a little bit nervous around it. But yeah, I do like the look of this one. Gaming realms, I am a little bit nervous about making another. Obviously DraftKings has done amazing for us, but I am nervous about making my large position in the UK portfolio another gambling company. But I really like this one at the moment. I mean, 14 times earnings. This company is doing 17% revenue growth, 31% in net income growth, 14 times earnings for this business. This looks really, really attractive for me right now. Like, we should be talking about a business here that should be not only like 20 times earnings, but you could argue the case for 30-40 times earnings, which is big upside from here. So I'm like, you know, it's a little bit more risky with this one, but I really like the look of this one as well. And good old Card Factory, wow. I mean, we know that the update was a little bit shaky that they brought out, but if they get anywhere close to the full year results now, 7 times earnings, 6.5% dividend yield, and there's so much more room to hike up that dividend yield here. If you look at the share price, it's gone back to the levels it was at in January 2023. So even with the bad update now, it's gone even lower than where it was back in 2023, which I think has priced in so much negativity that even if they do miss the full year numbers, it's still a good opportunity. I mean, if they do hit the full year's numbers at these levels, that's going to be even more crazy. But I really like the opportunity here with Card Factory as well, and I'm stuck at the moment between Money Supermarket, Game Realms and Card Factory. I feel like this could be my future top 3 holdings in the UK portfolio, but which one comes my largest position, I don't know, because I think all 3 of these are really, really good opportunities right now in the UK market. I mean, we'll see what happens with the budget. I mean, the budget could be a driver for them to go lower on the 30th of October, or it could be a driver for them to go higher in that time frame, but I'm really thinking about making these my top 3 holdings. But for now anyway, Hollywood Bowl is my largest holding in the portfolio. It has been for the last 2 years. I get a lovely dividend yield off the stock at the moment. I think I'm up over 70 or 80% on the position, and that's with a lot of averaging up as well. If I did keep my original buy, I would actually be up a lot more than that. I'd be up over 132%, but I'm still up a good amount on Hollywood Bowl at the moment, just short of 100%. And they did bring out their results on Monday, and as you can see from the headline here, beat profit expectations and revenue hits a record high, which is a lovely headline. And I actually bought some Hollywood Bowl only a couple of days ago, to be fair. This is what I mean. I'm still buying Hollywood Bowl. I still think it's attractive. I'm a big fan of now like buying my winners. I think sometimes you get caught on buying a dip and it goes lower. You buy a dip, it goes lower. Winners keep winning, and you want to water your flowers and cut the weeds, not the other way around. And I said here on the 6th of the 10th, I said Hollywood Bowl back at 13 forward times earnings, lovely divvy, Canadian expansion for further growth, and it was actually my first buy for a year and a half. So I did buy during that time frame, and the stock has actually rallied up a little bit since I did make that buy, which you can see here. Obviously you guys on the Patreon would have seen that I did make that move, because you do get my live buy and sell alerts. But the stock has rallied up a little bit, so the company has now gone up a little bit on a P basis. It's now gone back up to I think 14, 15 times earnings, which is historically about nearly what it has traded at. I do believe a company like Hollywood Bowl should probably trade a little bit higher than this, when you are doing the numbers that they've just done. If we look here, 7.2% revenue growth, I think that's a pretty decent premium growth there. I would argue the case for 18, 19 times earnings. UK growth, okay. The big thing was the Canada growth. And this is where they've recently expanded into. And they grew 42% in Canada, which is obviously really, really good. I still get confused when I see so many investors talk about where does Hollywood Bowl go from here? Have they hit the ceiling? And I'm like, what? Have you not seen the recent Canada expansion they've done in the last 18 months? 82% growth is really good, and the more that comes part of the business, and that's going to keep the growth up for a very long time. Like for like growth, a lot of people comment on this, and I'm like, well, what do you want them to do? They're a bowling alley. They can't magically put more lanes in a bowling alley unless they start raising the prices up more and more, which they have already done recently, so they're not going to do for a bit. That's not going to move too much, and I hate the focus on that. The big thing is to be staring at this Canada growth. That's where the potential is, and maybe Hollywood Bowl themselves can actually do an investor day presentation on the potential of that. That's something that may be a good idea. Portfolio now stands at 72 UK centres, and 13 of them are Canadian centres now. Strong centre pipeline for 2025 and beyond, and there is 4 bowling centres due to open in the UK and 2 centres in Canada in financial year 25. So that will add some nice revenue growth going forward in the next year, which will be great. That's the great thing. You can see the pipeline and you can predict the revenue off the pipeline of the new growth figures. And look at this, lovely growth on the revenue, lovely growth on the profitability. I think when you got a company that's growing at these sort of rates, you deserve to be more of a higher valuation, as you can see here right now. And obviously with the company as well, you're getting a cracking balance sheet here. Let's not forget there's absolutely no debt on this balance sheet. They do sit on 41 million of cash, so when they are making the profit that they do have every year, which is going to be around about, let's say, 38 million, they can throw a lot of that into the dividend, which they do every few years. They are paying out around about 61% of that into a dividend. So with the 40% they have, they can put that into new centres. They can potentially pay a special dividend, which they've done before. They could potentially buy back some stock. They've got a lot of options, really, really strong business from that point of view. So when I look at this one, Hollywood Bowl, I just think if you ever get the opportunity where you get this at like 13 times forward earnings, which we did only a couple of weeks ago, I just add into it every so often. I don't think it's a good opportunity as, you know, these kind of free stocks that we were talking about, but it's still, for me, it's just one that I've owned for a long time. If it continues to perform, you know, it's coming out with earnings that are going to be ahead of market expectations. The EBITDA is going to be ahead of market expectations. I'll just let my winners keep on winning, and that's what I'm doing. And if I have the opportunity to add, I'll add into them. What was interesting as well on Stockopedia, which you can join with a 30% discount code in the description right now. I went to have a look at Paul Scott's notes on it, and on his notes, he was still green, and he said EBITDA slightly ahead of market expectations. But same again, I was really surprised to see his, I mean, obviously he was really bullish on it, but he had the point of lack of revenue growth slightly concerns me, which once again, I was like, this is thing that I don't like. You know, what's the lack of revenue growth here? You've got your Canada expansion, which is up 42%. That's where the big growth driver is going to be for many years. Like, where's the lack of growth for me in here? Because I look at this company and I go, it's clear where the growth is. They're just going to keep adding more and more venues on them, especially when they've got the room in Canada now. That's where the growth driver is going to be. And historically, this company has delivered on that growth. You know, if we were to go on the past performance here, on the revenue growth, and you can see it's clearly just stepping up every year nicely, and especially look at that after the coronavirus situation. This company can clearly execute on that. So you've seen where the growth is right now. You can see the plans in Canada. You can see the pipeline for new venues. You can see the management has a history of delivering on this. I don't know where the concerns is around that. I think that this is a very high quality UK company, and that's why I can never believe when it trades at, like, obviously it's 16 times earnings, but like a week ago it was down at like 14 times earnings, and on the forward earnings it was like 13 times earnings. If you ever have a company like this and it does get to that 13 times earnings, I just have a little nibble, because this is a stock that just carries on nicely performing in the background, and I'm happy to hold it. And then I also get that lovely dividend, and yeah, it's been really good. I mean, like I said, I'm going to continue to hold this, but I gotta say, these I think the opportunities for potentially a new number one UK stock in the portfolio, but we'll see what happens anyway. Hope you enjoyed the video, guys. Hit the like button. See you in a bit.